Alright, hello everyone. This is DayTraderRockStar again with you with another trading tip. Just a little trading tip I like to call a tool of the trade. Well, first of all, let me tell you I broadcast each day on DayTradingRadio.com, and what I really like to pay attention to is the first half an hour of the trade. I think the first half an hour of the trade tells you a lot of information. First of all, it's very hard to get involved in the first half an hour. It's a very spiky, a very choppy area. Unless you have a game plan, I'd rather sit out and watch the first 15, 20 minutes, and then really start to concentrate on a time frame between 9:50 and 10 o'clock. Now, this certain time, there's a couple time frames during the day I like to watch, and that's just sometimes I use time frames as an indicator in the market. Meaning, I think one of the most important time frames is between 9:50 and 10 o'clock. If I see the market setting up, and the setup I'm looking for, and actually this is a good one to mark down, is watch for the markets to actually hold a certain support level going into that 9:50 area. All right. If we end up, and it's usually good to kind of measure that off of some type of news. If the market came out with a certain news that you might think might bring the market down, and it's actually holding up a certain support level, then you want to watch that 950 for a reversal. And in the same case, if nothing's really happening and we're actually holding a certain moving average, and I'm going to give you an example here. On the 13th, on Friday, we actually opened up, and we actually for the first half an hour traded. We kind of pulled back, and that's what you use the 950 mark. You want to really trade this setup off of a pullback. So you want to actually see a slight little pullback, but hold a certain level. In this case, you could see the market was holding this 200 period moving average on a 5-minute chart, which is a very strong moving average. Even we broke down that underneath us was the 50 and the 20 and the 50 period moving average too. So either of these moving averages would be a good area to trade off of. And what I want to see is that price level holding right on that moving average. It could be on the 250 or 20 moving averages, and then we're going to come into the 950 area, and we continue to hold that level. I want to watch for buying to come in, and then the market to push to new highs on the day. And that's basically it. It's a very simple tool to use. I call it the 950 reversal, and there's also one that usually happens between 215 and 230, which I call the 220 reversal. And it's just a little reversal off a slight little pullback. Hopefully you have some type of support level, which could be any of the moving averages. It could be a trend line also. Just something that's there that's holding us up, and we're going into a level where the market's no longer selling off. And again, if the market's not selling off, then it's either going to go flat or it's going to move up. And the chances are at 950, when people realize, and the big traders come out and they realize the market's not selling, they start to throw the orders into the market, and they start to take the market higher. And in this case, on Friday, you saw this happening. And again, this is a short-term trade. Not to say that this is going to be the trend for the day, but it's important for your first trade of the day. I would watch that, and also watch relative strength. Relative strength is also another key indicator you want to use for the first half an hour to an hour in the first trade. Another example would be watching the, and I'm not going to bring up the stocks for this. I'm going to do this on a separate video, but just to get this out, you want to watch the first pullback in the market. And if you see the market pulling back here between 9 and 9:30, you want to watch stocks, whatever stocks are on your watch list, be it Google or Microsoft or Valero or Citigroup or bank, anything. And you see those stocks are not pulling back relative to the market. If the market's pulling back and making new lows, but you see a stock that's actually going sideways or actually grinding up, this stock is showing relative strength. And this will be the stock that when the market does turn around and bounce, and when I talk about the market, I'm talking mainly the S&P 500, because we know that as professional traders, we like to track the S&P. So this relative strength, we're actually tracking off the S&P 500. And a great setup actually increases your profit potential, many times over, just because you're actually being on the right side of the market. You're being into stocks where money is flowing into. Even though the market's pulling back, there's money flowing into these stocks, showing relative strength and moving sideways. So again, you want to use this first half an hour of the trade to look for this relative strength. You also want to look for the market overall to hold that support line, that trend line, that certain area of support going into that 950 area. From 950 to 10 o'clock is usually where you're going to see that reversal. And again, not as often, but again, you could see that also in the 215 to 230 area, especially if you're working off a double bottom, is what I usually see. So I hope you enjoyed that little tip, just a little trader's tip. And again, you'll hear me broadcast that type of setup each day on the radio at daytradingradio.com. Just come on by, click on play, and you get to hear live market commentary every day. And that's about it.